Do you worry about your investments in the market? It's hard to forget the devastating market setbacks of the last 20 years. The dot-com bubble of 2001 and 2002, with losses close to 50%. And just as your account was recovering, we went through the financial meltdown of 2007 to 2008. Many saw their account balances go up in flames. The last 8 years has been the longest bull market on record. No one knows when the next bear market will happen, but history proves that it's inevitable. Want to avoid market risk? Let's look at using a fixed index annuity. In a fixed index annuity, you get half the gain of the S&P when the market is up. When the market is down, you experience no loss. No loss in the dot-com crash, no loss in the financial meltdown, and no loss in any future bear market. Look at it like this. If you put $100,000 into both an S&P index mutual fund and a fixed index annuity linked to the S&P 500 with a 50% participation rate beginning in 1999, at the end of the dot-com bubble, your S&P mutual fund would have fallen to just over $71,000, while the fixed index annuity would have locked in the gains and have a value of over $110,000. At the end of the financial meltdown, the S&P mutual fund would have tumbled all the way back down to just over $73,000. The index annuity would have once again locked in the gains from the good years with a balance of over $147,000. Zero loss when it's bad, and locked in gains when it's good. At the end of 2018, the mutual fund value would have grown to $203,000, while the fixed index annuity would have locked in the gains at over $270,000. Where would you put your money? On the red line or on the green line? We've talked about zero loss, but there's one more important zero to look at. That's the zero management fees charged in a fixed index annuity, as opposed to fees charged in other accounts. Management and advisor fees average 1% a year. Over a 30-year retirement, that fee drain will cost an investor 2/3 of their original investment, accounting for lost compound interest. That's $200,000 on a $300,000 account, or a staggering $666,000 on a $1 million account. You have to ask yourself, what am I paying for? Skip the risk, skip the fees. Get more information about fixed index annuities. If you'd like to get more information on the risk-eliminating power of fixed index annuities, please fill out the email form below. We'll send out to you our ebook, The Do's and Don'ts of Annuities.